Folks. Today we're going to talk about Canadians buying U.S. real estate. My name is Rob Lamontagne, and around the Thrive community, you guys all know me by now. And we'll start with a little bit of a legal disclaimer, because we are going to be talking today about legal components, about tax components, about accounting. So understand that proper advice is important. We're not lawyers, accountants, tax advisors, tax planners, any of those things. We are just real estate investors like you. And what we do here is share experiences with you and our thoughts based on our experiences. Our experience may or may not be appropriate for you. So it's important that you make sure that you consult the proper professionals and get the proper advice for you. So to start with, a little bit about how I got involved in U.S. real estate. As you guys are aware, I started out following the Rich Dad program in Canada. And after about a year of that, I started looking south of the border as well. And I took a couple of courses in short order on U.S. real estate, one with Glenn Purdy of the Millionaire Mentor Group, and the other one was Steve Martell dealing with U.S. foreclosures. I followed it up and did both Rich Dad courses in the U.S. under Rick Mariansky and Larry Schooler. They each have different take on financing in the U.S. I also did a U.S. tax and assessment and asset protection course with Anderson Business Partners in the U.S. so that I could understand asset protection and tax planning. I did commercial real estate with Terry Hale, and I also did a self-storage course under the Scott Myers program. So before venturing into the States, I started out with some courses and have continued along the way to have a basis for, number one, doing what I'm doing and talking about what I'm doing. So it's fair to say that property prices in Canada have increased way faster than the increase in rents, especially in provinces like Ontario, BC, Quebec. We have places where there are fairly stringent rent controls and rents have been restricted. So even though rents have gone up, the increase in rents for existing tenants have been highly restricted, and yet property values continue to increase. So it's becoming harder and harder and harder to find those properties that are going to cash flow positive. So what can we do? Well, when I started looking, I found that the answer was actually south of the 49th parallel. And what I found out was a tax law called the 1031 exchange. And it really is. It's a powerful and creative way to finance down payments. So 1031 exchange is actually a section of the U.S. tax code. And what it deals with is the exchange of like-kind qualified assets, where the acquired asset has a greater value than the relinquished asset. So those are the three key words: exchange, like-kind, and qualified. Now, what the Act says is that no gain or loss shall be recognized on the exchange of assets held for productive use in a trade or business or for investment. And what it does is it allows you to carry your adjusted cost base forward from one asset to the next on a disposition, as long as you meet certain criteria and you are exchanging the asset for something that is like kind. It's a case of, instead of being deemed a sale and disposition, it's being deemed an exchange. So like kind is an important concept here. Okay, the two assets must be of the same type, but not necessarily the same quality. And the rules around this get pretty hilarious sometimes. So 2 ES properties would be like kind, even if one was vacant land and another was multifamily. It doesn't matter whether the property is improved or what it's been improved with. Okay, property is generally considered like kind. That said, it only applies to a U.S. property. A U.S. property is not considered like kind to a foreign or non-U.S. property. And you have to read the fine print, because 2 cows are considered like kind, but a cow and a bull are not. So in this case, the gender of the animal determined that it was not like kind. So Like kind applies generally to similar items, but not necessarily exact. And in our case, where it becomes very interesting is when we start talking about like kinds of properties. So certain assets you cannot do a 1031 exchange on, and those are properties for sale, inventories, securities, stocks or bonds, interest in partnership, or certificates of trust. So, for example, your stock portfolio, if you were to sell AT&T, you could not buy another telecommunications company and defer the capital gain. It does not work for stocks and bonds and securities. But the nice thing is generally speaking, if an asset is not specifically excluded, it is considered qualified. So you don't have to go too far when it comes to looking at the type of investment that's acceptable. You just have to know whether or not it's actually specifically excluded. And there's some key conditions that have to be met. The value of the replacement asset must be equal to or greater than the value of the relinquished asset. So we have to be upgrading. We have to be buying something that is more expensive. The equity in the replacement asset must be equal to or greater than the equity in the relinquished asset. We have to carry all of our equity forward into the new asset. If we take any out, then we don't qualify for 1031 exchange. And lastly, the debt on the replacement asset must be equal to or greater than the debt on the relinquished asset. So we have to be buying a bigger asset with at least the same equity and a bigger mortgage. And the biggest key of them all, in all summary, is that all of the net proceeds of the exchange of the relinquished asset must be used to acquire the replacement asset. Okay, you cannot turn around and sell a property and take $50,000 out for personal use or for other use. You have to carry all of the equity forward. And there are specific time limits to this. Okay, so a taxpayer has 45 days after the transfer of the relinquished asset to properly identify a replacement asset. This is why you are going to see on a lot of US listings, okay, that a 1031 exchange is pending. They will get to a point where they're close to selling their property or they're looking to sell their property. But prior to doing that, they're already looking for an asset that they're going to be replacing it with because they only have 45 days to identify the asset at the time that their property for sale is closing. And the second time condition is that the exchange has to be completed on the earlier of 180 days after the transfer or the taxpayer's federal return due date. So for most taxpayers in the US, taxes are due on April 15th. So what you're going to see is as you get closer and closer to the tax return due date in the US, you're going to have fewer and fewer 1031 exchanges. And you're going to see the bulk of them, okay, start to occur after April 15th and into the summer. If the time limits are not met, the exchange fails and the transaction will be deemed a sale. And the taxpayer will have to pay the capital gains tax. The IRS makes very, very, very few exceptions on this. So you have to make sure that you adhere to the time limits. Unfortunately, we don't have this in Canada. We are not allowed to defer the capital gain on a property that we acquire based on selling one and replacing it with a different asset. And it applies to real estate. So this is one of those areas where the differences between Canada and US real estate laws is advantageous if you're able to buy in the US. And I'm Canadian. So that became a problem. How am I going to fix this? So the bad news is CRA does not recognize the 1031 exchange. Okay. If you sell something and exchange it under a 1031 exchange, it is considered a capital disposition and you are taxed in Canada. That is just the way our legislation works. We do not recognize it. And because no US tax was paid at the time of the exchange, there's no foreign tax credit and the entire tax is owed in Canada. That means double taxation when you come time to sell in the US. So it's a very difficult tool to use or difficult strategy to use as a Canadian if you don't know what you're doing. But here's the good news. It can be done. Okay. But you cannot hold the US capital assets directly. The capital gain on the disposition does not flow up to Canada. It's important. In order to do this, a US corporate structure has to be created and must be added to your Canadian corporate structure or to you personally. So here's an example using one of the three-tier corporate structures that we use in Canada, where we have a holding company, we have a management company, and then we have real estate companies that hold the asset. Now, most people dealing with US real estate will tell you that you buy your US company in an LLC, and you'll either hold it personally or it'll be connected to your Canadian company. The problem with this is that an US LLC is a flow-through entity. Whatever happens in that entity flows through to its owner. And this is where, if you sell it in the States, you can take advantage of a US capital gain if you're a US citizen. But in Canada, because we don't recognize the 1031 exchange, the sale flows through either to the person or the corporation that owns the US LLC. What you have to do is create a US C Corp between your Canadian entity or yourself and the US LLC. Now, just like in Canada, a corp is a separate legal entity. And so a corporation is taxed on its own, and the owner of the corporation is not deemed to have direct access to the assets. So as such, if you have that C Corp there, just like in Canada, the business activity of the LLC will flow to the C Corp, and the corporation will then be liable for the tax. But the owner of the corporation is not. And that's how you prevent the sale of the property from flowing through to Canada until such times as you actually bring the income into Canada. So how do we do this? Well, the key is you investigate U.S. jurisdictions with no state tax, okay, and minimal business fees. And when I was looking, Alaska, Florida, Nevada, South Dakota, Texas, Wyoming, and Washington were the recommended states. And those states are still very good today. I don't know whether there are any others at this point that have been added to the list, but those are very good states. I'm set up in Nevada, and at the time, Nevada was one of the top two that were recommended. So then you find a registered agent for your C Corp and your LLC. What happens in the US is that if you are a foreigner, you are deemed to be a non-resident alien. And if you want to own a business in the States, you must have a legal representative in the States that is actually a placeholder for your corporations and your business. And this is called a registered agent. And the registered agent will deal on your behalf in terms of having a local address and be where copies of books are kept. Okay, so you set up your C Corp and your LLC in a state with minimal tax. The one caveat here is that when you're setting up the LLC, you probably want to wait until such times as you have bought a property, and you want to set an LLC up in the state where you're buying the property. I learned the hard way that being a non-resident alien does not apply as just foreigners to the US. A non-resident alien is also considered a resident of Nevada who does business in Arizona. So if you are a resident of Nevada, you are considered non-resident alien to Arizona. And as such, you need a business license in Arizona as well as the business license in Nevada. So if I were doing it over again, I would wait and set up the LLC only in the state where I bought a property. But the C Corp, it can sit wherever you want. So it can sit in a state with no tax and minimal fees. Then you get a federal EIN. That's an employer identification number. And you get it for both US companies. And an EIN is nothing different than in Canada, we have a business number. So same thing, only different. And then you open US bank accounts for US companies. Now, when you're opening your US bank accounts, it is easiest to do that if you're using a US bank with a Canadian parent. So right now, it's easy to get U.S. accounts through RBC, BMO, and TD. You can sit down in your branch office in Canada, and your account manager in Canada will become your connection to being able to open the accounts in the US. The problem there is that if you're dealing with RBC, RBC sold off their commercial division of their US company to PNC Bank. So be aware that if you are going with RBC and you're going to open a multifamily commercial account, then you're going to end up with PNC Bank, and PNC Bank will only do business with you if you're doing business with them in a state that they operate, and they're a local bank in Georgia and Florida. So just be careful with that one. And then you start investigating properties and making offers, just like you do in Canada. So it's no different than Canada in terms of making offers, and the terms and conditions that you would put in your offers are exactly the same. You're looking for financing, you're looking for inspections, you're looking for verification of income and expenses, you're looking for verification and approval by your solicitor and by your partner. Okay, these are all the same conditions that you're looking for if you're buying a U.S. property. And then be aware that you're going to have to file U.S. taxes for your U.S. companies, and you may have to file U.S. taxes for yourself and get an ITIN. An ITIN is equivalent to a social insurance number for a non-resident in the U.S. So in the U.S., they have social security number, we have social insurance number, and ITIN is the social security number for a non-resident alien. And make sure you get proper legal and accounting advice. Very, very important. And that's it for the 1031 exchange. Any questions?
No, good there.
All good? Good, Natalia?
Hi, Rob. A question. What about the partnerships? What if it's set up as a partnership, where, say, the general partner is a C Corp and the Canadian holding is a limited partner?
You will have to go and talk to the accountant and the lawyer who are going to set up the limited partnership. I know people are using limited partnerships very successfully in the US. If you're going to do that, you're going to be looking at doing a much more complicated setup. Limited partnerships are legal entities on their own, and there's different business reporting requirements for the limited partnerships. So you are going to be talking to your lawyer. But I do know several people who are setting up LPs very successfully down there and doing well with them.
Okay. Thank you.
Okay, so on that note, I will stop sharing. And we can just open up the floor to anything else people want to talk about.
Rob, I sent you an email. I don't know if you received it.
Yeah, and in fact, I've replied to you twice.
Oh, I didn't receive it. That's interesting.
Okay, because I've done a reply to it twice.
Oh, yeah.
And yes, I have no problem. I will try resending it again. You sent me an email. So I'm not sure why the reply would not go through. Do you have an alternate email?
I do have my office email. Let me just
okay, so if you send that to me, I'll do a reply again, copying the office email, and then you confirm that you get it. And I did actually reply twice to your email.
Thank you. I was figuring out, that's what I thought. I thought it just doesn't go through because it's not the only example. So it happens to my emails sometimes, and I don't understand what the reason. So good that I checked. Thank you.
No problem. And you are correct. There's no problem us setting up and going through and hey, Mike, no problem with setting up and working through the spreadsheets with you, and no problem doing a call with your bio and with your elevator pitch.
Thank you. Maybe not this Friday because something came up at work. So if
I sent you my calendar.
Oh, fantastic! Thank you.
And like I said, I may have to do it again, but that's life.
Sounds good. Thank you so much, Rob.
No problem. How's it going, Mike?
It's going all right here. I'm out in the field at work.
Okay. Well, you missed the 1031 exchange presentation, but no worries. You've taken creative financing, so you got it in there.
Yeah, perfect.
How are things going?
They're going good. As far as I've got one lease option going that I just started on May the 14th. And personally just doing some refinancing personal with the house and a little bit of cash jamming and that sort of thing.
Cool. So things are going well overall then?
Yeah, still slow for what I would want.
It always goes slower than we want.
Yeah. This normal work thing is getting in the way.
Oh, that's very true.
Work always does. I know that was one of the things, is always making sure that I had the time scheduled to do the real estate while I was still working full time.
I think you need to have a discipline. That's what I finding. It's hard, right? When you work full time. So now, as you recommended, Rob, I do evenings and the weekends.
Yeah, and as long as you block it and you make a commitment to doing it, and you're consistent, you get there.
Yeah.
But it does take time. And again, you're not finding big deals on properties overnight. These are the kinds of things that it takes time to find the right properties. And you have to build the relationships and work the networks.
Oh, absolutely.
Mm-hmm.
So what else is on your guys' minds today?
I'm getting more interested in your self-storage units.
Okay.
And how that would how do you think that would work in a Canadian market?
It works in a Canadian market. I know that I have not found storage units in a Canadian market, however, that will cash flow positive. As the cost of the units is much higher than in the US. So what I found, and I'm still open and I still get storage facilities from Canada sent to me. But when people are starting to ask almost as much for a storage unit as for a one-bedroom or apartment building with one-bedroom apartments, the numbers just don't make sense.
Right. Okay. You have on yours in the US, do you you go by for, I guess, per year? Is it like $2 a square foot, kind of that range of profit per, like when you have a unit, say it's a 15,000 square foot storage unit, what profit are you looking at, or to, median?
It depends on the size of unit. And really the larger units, the 10 by 20 units and the 10 by 10 units are really the units that make the money. Anything smaller than that, as you start getting below the 10 by 10, they're difficult to rent. So if you're looking at storage facilities that got a lot of these 5 by 10 and 4 by 8s, those become very difficult to rent. Your 10 by 10s and your 10 by 20s and in that range are the best ones. Once you get bigger than that, then you're into vehicle and boat storage most of the time.
Mm-hmm.
What we see on the storage is per square foot costs running between, depending on the area, like in the Midwest, storage is very cheap. So I've seen square footage rentals in the neighborhood of 50 cents per square foot per month. And I've also seen storage rentals in the $1.50 to $2 range. I haven't investigated anything in what I would call very expensive markets. So I haven't looked at California. I haven't looked at New York. I haven't looked at places where I know I'm not going to be able to make anything work anyway. But through the US Southwest, through Arizona, through Texas, through Georgia, through South Carolina, through Florida. Those are areas where our partnership has bought properties.
Okay. And when you usually buy the properties, is there a lot of upfront, to improve it so you can increase the cost or what have you at, are they looking for your whole syndicate kind of thing? Are they looking for value added properties?
Yes, they are specifically looking for value added properties. They're looking for properties that are older and that aren't up to current technology standards. So the first thing that they typically do when they buy a storage facility is they put a big fence around it, and they put it all on electronics with automated rentals, automated everything. There's very little staff requirements. There's usually only a property manager on part-time call to be able to manage if there's a problem. But for the most part, it's all automated. It's all vending machine. You buy your locks, you buy boxes, you buy everything by vending machine. You sign your contract at the gate in a lot of cases, and you get a lock. So it's very much the direction that U.S. self-storage is going from these open air, no security type places to value add, to the secure storage, and that's where the value add is.
Okay. And then on the for the individuals who are renting them, how does in the majority, how are the payments done? Is it mostly credit card?
Almost all credit card.
Okay.
Automated charge to your credit card, based on you're buying your contract.
Okay. And your facilities, do they kind of in the background add, say, a fee because of the credit card fees?
I don't know how they actually physically structure the payment. I would imagine that the fees for the units are such that the credit card fee is covered as part of the rental. I don't think there'd be an additional fee, because I know in most cases, I mean, everything is bought at the gate. Like you get access to the storage facility and a unit number and contract based on signing at the gate.
Okay. Well, that makes sense. I mean, that's a good way to go. Just very low overhead and everything.
Yeah, for sure.
I have a question.
Go ahead.
Yeah, actually, two questions. One question is about the private lending. Somebody approached me and asked to finance, come in as a private lender with a second mortgage on the primary residence.
They want you to come in?
Yeah, as a private lender and on a primary residence. So they wanted money. They wanted to give the second position mortgage on the primary residence.
Yeah.
My concern is that if the first position mortgage is with the bank, they usually use the collateral as a negative pledge, meaning that they will not allow the second mortgage to come in, and you have to register the second mortgage. Sorry, not register. You have to let the first position lender know that you are being a second lender on this property. So what document do you have to sign in this case?
Okay. Well, most of the time, people who put a second mortgage on a property do not notify their bank.
Exactly.
And the bank would only find out if the bank did a title search, which they will often do on renewal.
Mm-hmm.
So somebody putting a second mortgage on their property is likely not notifying their first lender. Okay.
Oh, yeah.
Secondly, okay, why do they need a private money in order to do a loan?
Oh, I think they want to pay for some real estate fees.
Okay.
So it went through. It's a contact. Because last year I took a training with Ben Humble. So somebody who wants to buy the course with him, it's cost a lot of money. Program. So they want to mortgage essentially their primary residence and take out. That's what I understood.
Okay.
So they were directed to me.
Okay, so if that's the case, why would they not go to their bank and have a HELOC or a line of credit attached to their property?
Oh, it's because bank subsidizes part of the mortgage of a private lender. So we're getting the interest that is lower. The private lender, as a private lender, will still charge whatever, like 12%, 13%. But the bank will be subsidizing part of it so that it
Okay.
makes it attractive for them.
Okay,
They will
but
pay less than what the bank will give them on a HELOC.
okay, that means he must be subsidizing it a lot, because on your HELOC you're generally going to be somewhere between 1.25 point above prime. So right now HELOC borrowing rates are in the 4.5-5% range at
Yep.
the top end. Okay.
Correct. I
So-
don't know how he does it, but because
Okay.
I was give my coordinates and
So-
the other person
so-
approached me.
So here's the key. What is the loan to value going to be on the property?
Oh,
after you-
that's my condition would be always less than 70%.
Okay.
70%. Yeah.
Now, you do realize that in the event that these people default on their first mortgage, their first mortgage company is going to be, their first mortgage lender is going to go and they're going to foreclose on the property through, depending on where it is, either foreclosure or power of sale or whatever the process is,
Mhm,
and that there is a high risk
mhm.
that you will not get your money back.
Yeah, and that's why
they-
I'm not comfortable with that. I would I'm not very comfortable. And I know the bank puts a lien. I think I saw it in your creative accounting course, 125% of everything. And that's why I wanted to make sure that the bank knows. First of all, the bank knows because it's a risk for me if they don't, right? And to make sure that I account for 125% of whatever is outstanding on their first mortgage. When
Well, the 125% is if the bank were to give them a HELOC and they put a collateral charge on the property. You wouldn't be in a position where that would be your concern. Your concern is going to be what happens if they default.
Yeah.
And you being in second place, this is not somebody who is looking to buy assets. This is
Correct.
not okay. So there are certain conditions under which I do private lending.
Mhm.
I did a home renovation loan that I'm not happy that I did. I did a debt consolidation loan that I'm not happy that I did. Okay, because they ran into complications. In one case, I'm still in court fighting to get my money because I was a second mortgage lender on a debt consolidation back in 2017. So I can tell you that's why I want to know the story. Why do they need the money? Because I will never lend on a debt consolidation again.
Yeah, I'm not super comfortable with the second position because for that reason, but it's collateralized on the primary residence. So in Yukon, actually, it's not. It's far. It's a no-go for now for me. So it's because I was thinking of using my RSP first to do it, but then I kind of said I don't know what I need to do with the first position.
I can tell you if it's collateralized against a property in the Yukon.
Yeah.
Okay. Properties don't sell in the Yukon very easily.
Oh,
so if they were to get into a problem, well, there's not the population, there's not the demand. So if you were to get yourself into a situation where the first mortgage lender was calling the loan and forcing it into foreclosure, okay, the odds of you recovering your money are very low because of that security.
Gotcha. So I did a good thing then.
Yeah.
So
I would be really careful about Yukon. I mean, you're buying into a sparsely populated area, so you need if you're going to be a second mortgage, you need to be able to maintain and view a consistent value, and be able to sell the property in the event of default.
Correct. Okay, perfect. Thank you. And my second question, what's my second question? I forgot. I started to forget stuff these days.
Yeah. Well, then while you're thinking, let's get a picture. Harisha, you got to turn your camera on? At least so we can get a picture. Ah, thank you. Everybody smile. Okay, we'll do that again because Natalia was looking into space.
Oh, okay.
That's okay. I'll just get another one. Why is that there? Snipping tool. New. Now I look like a space cadet. Good. That made everybody laugh. That's a good picture.
Excellent.
That's
Good thing you
okay.
finished, Rob. My jaw would have fallen off.
I recall my question, Rob.
Yeah.
I speak periodically with a real estate agent in Alberta, and yesterday they sent me an opportunity in Alberta for a commercial real estate where the tenants are actually commercial and it's not it's not residential building.
Okay.
And it's in the middle of nowhere. And but there is RBC who is anchored, it's RBC, dental clinic, and some others, saying that the cap rate is 8.05%, and NOI is also positive. And so I did ask for pro forma, and I'd like to use your spreadsheet for that as well. But I wanted to get your take on commercial buildings. Like, what do you think versus residential?
Commercial as in true commercial. So
True
business.
commercial.
Okay.
Correct.
So number one, you want to make sure that you verify the leases.
Okay.
And that hopefully you're into a triple net situation. Triple net means that they're paying the property taxes and they're paying for all renovations and they're paying for all fees and costs. So electricity, utilities. Okay. Triple net means they're renting the space from you and they do everything else.
Okay.
So that's one thing. You want to make sure that you don't have vacant units.
Yeah.
Because depending on the market, it can be difficult to rent out vacant units.
Mhm.
And you want to make sure that if the unit is vacant, that it's not your anchor tenant.
Yeah.
Okay. So for example, is this like a little strip mall?
Yeah, exactly.
Okay.
It's like a strip mall.
So typically in a strip mall, you're going to have maybe a drugstore, or you're going to have a convenience store of some kind that anchors it, or a bank.
It's a bank. It's RBC.
Okay. So a bank would be a good anchor tenant in a little strip mall.
Okay.
So you want to make sure that the bank has a nice long-term lease because they're your anchor tenant. And even if you end up with a commercial vacancy, the fact that you have a Shoppers Drug Mart or a bank in the same little strip mall means people go there for the bank or the Shoppers Drug Mart, and so it's easier to fill those vacancies.
Okay.
So what you want to make sure you have your numbers, and don't rely on pro forma, rely on actuals.
Okay.
Rob, you look like you want to talk.
Yeah, Natalia,
Yeah?
is the strip mall an old strip mall?
It looks like old. I look at the picture. It's like, yeah, it is old.
Is it? I would be careful about the bank being the anchor then, because a lot of banks
Okay.
are moving out of smaller old strip malls and building up new ones. So just, when
Okay.
you're doing your due diligence, you have to make sure you check the lease and maybe see if you can
Okay.
have a conversation with somebody about what are the odds that they'll renew the lease.
Gotcha. And it's also in a very small place, like in the middle of nowhere, which also a bit of a concern for me because I wanted to make sure the population is growing. Like in a place where it's more of a, and I'm in Montreal, so I'm looking for a passive investment because I have a full-time job, right? So somebody has to be managing it there as well, so which will add to the cost.
Can you say what town it's in?
I can tell you your town, just to give me 1 second. And it's off market, by the way. It's Edson.
Oh, okay. Yeah.
Okay.
It is small. There's a lot of oil and gas there.
Oh yeah. Okay. So that's a good thing, I guess.
There's a gas plant right there, and a lot of people drive out on the Highway 16 out there going west.
Oh, that's good to know. That's good to know. Thank you for that. So I'm waiting for the numbers. So I asked him to send me the numbers, and we'll see. We'll see if the
Natalia,
operate is ready.
you can host a lunch and learn on that property, evaluating that property.
Absolutely. Absolutely.
Yeah.
I will be happy to do that.
Yep.
I'll be happy to do that. I've asked for the financials, so I'll host the. Even if I do it incorrectly, is it okay?
Well, yeah, but no.
You
But,
would-
but once you've analyzed the property and done your due
Yeah.
diligence, and that's an awesome topic to host lunch and learn.
Perfect.
Next week, Ryan is going to be talking about Regina and the Regina market. So
Super. Fantastic. I'll do that.
yep,
I'll be
more
down.
people to get involved, the better.
And I wanted to send invite to somebody who is also like my fellow investor, if it's okay to them to join the community as well.
Absolutely.
Like we're
Just
looking for
send
new
them a
members, right?
meet link.
Send them an invite link and
Perfect.
tell them like they're supposed to answer like 2 or 3 questions. Tell them Natalia sent them, and that way
Okay.
we'll know as soon as we see it that okay, this is somebody that you referred. Because we scrutinize who comes into the group.
For sure.
Because there have been a lot of trolls come in over time and people spamming. So we do control when people send a request to join the group who gets to join. So
Perfect.
if it says in there Natalia sent me, then we know that it's your friend.
It's legit.
Exactly. It's your
Okay.
friend.
Okay. Perfect. Sounds good.
So I'm just checking my email, Natalia, to confirm. Because I know that there we go.
I still have to.
So
give
yeah,
you-
I resent yesterday.
Uh-huh.
After I got your note on Thrive, I
Yeah.
re-replied again yesterday.
Interesting.
So you should have two emails from me at
Okay.
least that show it.
Yeah, and I'm looking at this now, and I don't have it for some reason.
Have you checked
Oh,
your spam folder?
I'm just checking it now, and it's not there for some reason. I don't understand what's happening. I receive a
Okay,
lot
because
of.
I did a direct reply to
Yeah.
the email.
I'll send you my my office
Send
email.
me a secondary one, and I'll reply again.
Yeah, and I think I have my Gmail as well account, so I'll send you both just in case.
And
Perfect.
I'll reply again.
Fantastic, thank you.
So anything else today, guys?
They're all good for me.
And Rob?
I'm good. I'm sorry. I'm in a really loud place. I planned on getting home in time, but it didn't work out. So
Oh well, that's life. So okay, so you're gonna post the video today and send me a copy.
I'll post it in a couple of days. I
Sounds
edit
good.
the beginning and the end just to get rid of the small talk.
Yep, absolutely.
And
Okay.
I'm
And
in
if
class
anybody
this
wants
evening.
if anybody wants to invest in RTOs, I might have some.
I'm interested. Yeah, I'm interested, but in my RSPs I don't have a lot because there's a RSP that managed with my company. There's RSP that I manage myself. I buy stocks and bonds. So yeah,
We can
and
figure something out.
yeah, we can figure.
Lots of need a financing class, so I can figure something out.
Yeah, definitely, definitely. But I wanted I do have questions about RTO, and because I watched in the first video, so. But I'll keep it aside. I'll put it aside, Rob, so when we connect, I'll ask all of them.
And if you've got a good deal on an RTO, Mike, it'd be good. Like same thing. Like come into the lunch board and talk about it. Post your numbers.
For sure.
Fantastic.
Okay, sounds
Thank you
good,
so
guys.
much.
Take care. Have a great
Thank
week.
you. You too.
Okay, bye.
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 Bye. Bye.